Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices. But just before we get into the video, anyone who's interested in joining my Signal team and receiving my own personal trades, then make sure you visit my website, dailymarketmovements.com. The website link is in the description of today's video. Once on my website, if you scroll down, click here, subscribe, and you can join my Signal team for a very small joining fee of $29. But let's get into today's video, currently starting with the S&P 500, which finds itself trading at this moment in time at around 4,852. I think towards the upside we're looking quite overdone here. I do believe that we are set to see a pullback. My cycles are telling me that we could potentially expect a big decline from the beginning of February all the way through to mid-March. Now, what does that mean? That means that we could potentially consolidate around current levels or maybe even rally slightly higher going into the 27th of January. But come then, I think that that's an area where you need to really consider taking profits here, and I think that we will probably see a dip. This is based off the average performance of the S&P 500 in a election year dating back to 1950. So, almost 25 years of historical data tells you that, it's very normal to see a pullback from from February all the way through until mid-March. Moving over to the Nasdaq100, very similar, if we draw these trend lines, I'm coming up with the same conclusion. That's that we are becoming quite overextended here. We're seeing stocks today like AMD, that's down 4%. Microsoft even, that's down 0.5%. So we're starting to see some of the big tech high flyers start to decline, and I think that is very fair given the large gains that we've seen there over the past 4 months since pretty much the beginning of October. And then finally, moving over to the DowJones30, very similar to the S&P 500 and the Nasdaq100. Again, I'm seeing some very overextended charts here. If we just look on the daily chart, here's a massive trend line that I've drawn, and we are really testing the top end of this trend line. So I think that's very appropriate that we do consolidate here, and I think as we go into the month of February and March, it's highly likely that we are going to see some consolidation and probably some backfilling where we maybe go and retest a 50-day EMA, which is an area which we haven't tested since October, and that sits at around 36,675. So I think some consolidation of these gains that we've seen over the past 4 months since the beginning of October is very healthy, and going into the second half of this year, it could elevate us to new higher levels. That's going to wrap it up for today's video, guys. Don't forget, if you want to join my Signal team, then make sure you click on my link in today's description, which is dailymarketmovements.com, and you can sign up for a very small fee of $29.